Welcome to a new episode of Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this is a podcast that will make you a smarter investor, period. And this episode is definitely going to make you a smarter investor. I want to welcome in for our feature interview Lindsay Hans and Eric Schimpf. They are co-heads of Merrill Wealth Management. Good to see you all here at the NASDAQ in Times Square. Appreciate it.
Yeah,
Great
good morning.
to be here, Brian.
Level set for us, of course, Merrill Wealth Management inside of Bank of America. How big is this business, Lindsay? Just let's get some numbers on the table here.
Sure. We have the privilege, Brian, of leading $3.6 trillion in client balances.
Trillion?
So with a T.
Okay.
We are spread out across 600 locations across the United States. We have thousands of financial advisors that lead those clients. So it's a large-scale firm, and we're growing.
What is it like having the responsibility to oversee $3.9 trillion?
Yeah, it's, well, first of all, good morning. It's a big business, as Lindsay said, and sometimes you look at it and you can say, wow, it's great. It's a great honor, it's a privilege. You know, Lindsay and I have, as she said, you know, we work with 28,000 fantastic teammates every single day who just look to care for their clients. And it's big, it's a fair amount of time on the road, as you would imagine. It's a great responsibility. But we work with just a great team of people.
So April, of course, has been a roller coaster for markets. Maybe that's putting it nicely. Bring us inside how your life has been so far. Where have you been? What are you hearing from clients? Because when I talk to investors, some of them are scared out of their minds. Others are looking for opportunities. When I talk to CEOs, same vibe. They want to put money to work building new plants, but they have told me operations and planning are in a state of chaos. How are you seeing things?
Yeah, I mean, well, first off, as we headed into the year, I think all of us knew we were a bit overdue for a correction. So in some ways, we were expecting something. You never know exactly how it's going to come, when it's going to come, and what the different dynamics are, as we know. But our advisors have made a career over helping clients through periods of volatility, and every period of volatility feels a little bit different. This one a little bit different, of course, but we work with clients in a way that tries very hard to prepare them. We're very anchored in financial planning, and when you're doing financial planning the right way, you're starting with a client of what's your risk tolerance, what's your time horizon for liquidity, what could go wrong here. And so when these things come, we feel that we've really prepared our clients. And we also lately, especially the last month, have been talking to clients about things like the power of staying in the market. When you look at since January 1st, 2020, and you look at the 10 best days in the market since then, had you been out of the market in those 10 best days, you'd be down 33%. Being in the market for those days and all the time in between would have led you more like up 18%.
Maybe Warren Buffett's onto something.
Yeah.
I mean, he's a pretty smart
we
dude.
We talk to clients about staying the course, right? And we do listen to Warren Buffett as well. So
And as Lindsay was saying, really grounded in a plan. And when there's bumps like this or things happen, and again, they're never predicted, but they're due once in a while. It sort of puts that. It tests that plan a little bit to the foundation, right? Okay, we've talked about turbulence, we've talked about risk, we've talked about up and downside.
Can I still hold this stock that's down 20%, it's down 5%,
and then you have it, right? And so it's a great time to sort of maybe revisit some of those tenets. What's the goals? What's my time horizon? What truly is the purpose of these funds? And sort of get grounded back in. And then I think the next steps are sort of easy then, right? You sort of say, okay, am I allocated properly? Where am I short? Where should I be looking to maybe add some things or make some changes?
I'm always interested in what folks such as yourself are hearing from clients. What are you hearing from your financial advisors? These folks are on the front lines, especially in this environment. What questions are they coming to you with? And what's your message been to them when they're on the phone with clients that might be scared out of their minds?
Yeah, I think we've heard a lot from financial advisors in some ways of, hey, we've been through this before and we will get through this. And again, this just validates our model in many ways, Brian, right? The power of having a human advisor sitting next to you, the same side of the table, looking across at what's going on, whether that's in the world, that's in your portfolio, that's different solutions we have to figure out what you want to do. And that partnership and relationship becomes even more valuable in a market like this. So in many ways, advisors are feeling great because they're being proactive with their clients, they're helping their clients understand the guidance. I think this one may be a little different because our advisors have clients on both sides of the aisle, and in this environment, given what's going on, there's probably a bit more of a political conversation, maybe even before we get to the portfolio, and that's being initiated by clients.
Well, I'm glad you mentioned that. I'll stay with you on this one. Are Republicans investors, are they okay with the volatility and they're going to ride through? Because when I talk to investors that have voted for President Trump,
yeah.
They're like, he's going to bring back manufacturing. He's going to cut regulation. I'm okay if my stocks are down. I'm confident over the next 5 years, these stocks might be back up. Do you hear that from them?
It really varies client by client. You're probably going to get a bit more of that sentiment from clients on the Republican side of the aisle, but everyone's going to process this a little bit differently. Again, depends on where they are in their life, their portfolio. There's just a lot of emotion going on right now, as we know, so it's just going to depend on the client.
I thought robo-advisors were going to take over everything.
I don't think it would surprise you that the co-heads of Merrill Lynch believe the best advice is given by humans.
Not a shocker, guys.
At the kitchen table, right? And you asked Lindsay about, what are advisors thinking right now? How are they? It's just been great to watch them. I mean, they're at the kitchen table, they're on the telephone, they're just again grounding themselves and their clients back in this financial plan. The risk that you're taking, is it proper? What's the goal for your money? And being part of Bank of America, we just have access to information and access to data.
Mm-hmm.
One thing I would, Lindsay and I encourage people to, something called the Bank of America Institute. We have 70 million clients at Bank of America and customers, and we see that data, right? And we have real time, what are clients spending money? What are payrolls looking like? What are savings account balances looking like? And when you have 70 million data points, you just sort of get a real time, view as to what's going on. That then through the work, Chris Heisey and our research team, they take that data and they frame conversations for our advisors to have individually with clients, and it sort of helps with the pathway of a way forward.
One piece of research we read at Yahoo Finance from B of A is the fund manager survey, and the most recent one dropped and had a lot of cautiousness in this report. Do you see that cautiousness with clients that reflected that, that the report caught? I believe they just seemed very bearish on stocks.
Yeah, we saw that as well. When we look though at the peak volatility period earlier this month, as we were looking day to day, Thursday, Friday, Monday into Wednesday, our clients were actually net buyers during that period on the wealth management side, and particularly with ETFs. So we saw a lot of buying in ETFs. You saw some selling, but you saw more buying. We saw a lot more interest in our centrally managed portfolios that Chris Heisey and the team run, as well as our custom managed portfolios with several strong third-party managers that come in and provide that for our clients. So we did not see, and even later in the week, we did not see panic bond market selling. So again, we generally saw the power of this model of stay the course. And at the end of the day, we're going to get through this, and I'm going to go back to my plan as a client. And has anything changed for me in my plan? No. And then we're going to monitor. We like everybody, there's a lot of uncertainty as to what comes from here, and we've got to monitor. But generally, we did not see clients hitting the sell button across the board.
When clients are dipping their toe back into a market that it's off its highs, what are their reasons for coming in here and buying, even knowing that the markets may turn on a dime because of one social media post?
I think it's grounded in this financial plan that Lindsay talked about. It's this idea of, I'm a big believer, the old adages of the markets work. Dollar cost averaging, having some dividend, having a well-diversified portfolio, buying on a regular basis. If you look back over time, Brian, those things work. And so it's looking for ideas, it's looking for, okay, where am I allocated toward my risk tolerance? Again, what are those goals? And then saying, okay, the things that we made a decision on 6 months ago, are those fundamentals still in place? Are the reasons why we made those decisions still the same? and now maybe we have an opportunity to add some things. And if you look at our client balances, we have been net buyers over the last couple of weeks, as Lindsay said, but cash is there. I would say there's a fair amount of dry powder. If you look at that $3.6 trillion, and I think that's a couple reasons why. There's been an interest rate the last couple of years, so clients have been able to sort of have cash as an asset class again.
Cleaning up on my B of A CD.
There you go.
Thank you. Thanks, Brian Moynihan. Should I be thanking him, CEO of B of A? I don't know.
We'll
Maybe I
tell
thank the Treasury market.
We'll pass it on.
I think. I don't know.
But there's been a rate on cash for the first time in a while, and clients have taken advantage of that. And cash has become an asset class again. And I think that just gives clients an opportunity to say, okay, when the time is right, to think through it, again, with a time horizon. Most clients aren't invested for a day, right, or a week. What is that long-term goal?
Everybody wants to be long-term.
Yeah.
Until they get punched in the face and their stock is down.
But that's why I come back to my opening, the opening question you asked me is, markets like this test that resolve. They test the goal. Clients set to retire. Said, now you want to retire tomorrow? Or are we still talking about retiring 20 years from now? And I come back to Lindsay's comment of, days in the market matter.
True. All right, hang with us. We're going to go off for a quick break. We'll be right back on Opening Bid. All right, welcome back to Opening Bid. We're having a great conversation with Lindsay Hans and Eric Schimpf, co-heads of Merrill Wealth Management. Hopefully, they are going to help you make lots of money in the market in this episode, and really all for free. You have to watch this.
That's right.
But anyway, I recently had a conversation with Treasury Secretary Scott Bessent, and he mentioned in terms of Treasuries maybe not being in a crisis. Where do you see the bond market headed?
Yeah, so we try to think about things, Brian, in the standpoint of scenarios, right? So when we look at the broader macro picture, our CIO team's base case scenario is actually one of still some moderate growth broadly, in terms of earnings growth. You're going to get periods of choppy volatility here and there, but overall, that's actually our base case. We have a bear case scenario that speaks a bit more to your question that's going to show, flat to negative earnings growth. We're going to continue to see a pickup in bond yields, and things are going to be a bit more dire. Again, we've got to run the company in a way, as Brian Moynihan says often, that prepares for any and all environments. And we believe we set the company up that way, and we've got to be able to help clients through both of those different scenarios. So,
and we listened to your, we saw your.
Thank you.
Listen to the interview.
Appreciate it. Much appreciated.
Yeah, and I think we would agree. He was a big proponent of financial literacy.
Yes.
And having conversations and working with advisors. I think he's exactly right. And we talked a minute ago about sort of old adages. Things work. I think one of the things that really works, and we're both parents, is starting early and starting young. Right? What are first-time investors doing? What is that next generation doing to get started?
Hopefully they're buying their kids on video on the dip, guys. I mean, let's just be honest. Well, let me, before I go down the rabbit hole of that one, well, the other thing the Secretary mentioned to me is the tax plan. And he specifically said we might get clarity on the next Trump tax plan by July 4th. Yeah. Thought it was an interesting comment.
Yeah.
What are you hearing? But he did not rule out letting tax cuts potentially expire on the wealthy. Yeah. What are you hearing from clients right now? How are they preparing for a potential tax plan later this year?
Yeah, so much going on right now. You've got tariffs, you've got immigration policy, you've got the tax bill, you've got deregulation and the impact on multiple industries. I think any one of those alone is complicated. Mm. All of those together is quite complex, as you know, to try to predict and navigate. We are waiting and watching like most in terms of how this is going to play out. Again, and just trying to stay with clients and manage to what does this mean for you? At the end of the day, staying the course. But there's quite a few uncertainties right there.
And the cycle's quick,
yes.
Right? And we often say, what it could be versus really what it is. And yep. It's a lot easier when we sort of know what it is.
Well, if taxes do go up on high income earners, yeah. What changes do you anticipate them making to their portfolios?
Well, I think tax advantage investing, whether it's a new tax plan that changes rates on the wealthier, has been a theme that has just been popping up even prior to this administration. I mean, it is one of the biggest themes that we hear people leaning into, whether it's tax rates. The market's had a pretty nice run the last couple of years, so embedded tax gains that people already have, and they're looking to transition their portfolio a little bit because risk might have changed, they might have achieved a goal. So we think, having solutions that take really tax advantage investing at heart is really a big area of growth for us. And Nancy Fahmy, a wonderful teammate of ours that leads our investment solutions group, has really been active in sort of how do we provide solutions that help clients do that.
This might tie somewhat into this, is the 60-40 portfolio dead? I recently had a guest on here, and he was suggesting, Larry McDonald, he was a bond investor, he was suggesting 30-30-30, with 30% being tied to commodities. Where do you stand on that?
Yeah, I mean, we were just looking at this the other day. When you again go back to the periods of peak volatility in April, if you looked at a hypothetical diversified portfolio of domestic equities, international equities, and bonds, you were down 3%. You look at that compared to the S&P over that period, which was down 10% year to date at that point. So we continue to believe the power of asset allocation, diversification in terms of gold. Gold could be a great hedge in periods of volatility.
Yeah, I would add to 30-30-30, whatever the mix is. I think there's an asset class also that's sort of starting to come on in this idea of alternatives, private equity, right? 15 to 20% of the companies here in the United States are publicly listed. Right? There's a huge market out there that's not, and we see clients, ultra high net worth clients, wealthy, all the way through the wealth continuum, that are seeking for this demand of alternative investments and access to private investments and private companies. Our research, our asset allocation models could say, some clients with the right time horizon, the right risk tolerance, up to 25% of their portfolio into something like alternative investments. So, the traditional equity, bonds, cash, maybe it's equity, bonds, cash, and alternatives in a very fast growing sector. We talked about tax advantage investing a few minutes ago. I would say just the ability for the public, investor to reach into the private space is really a theme I think people should be paying attention to.
The cool thing with this podcast is that viewers and listeners get direct access to our guests. So they're getting direct access to you. Let's say someone has a $500,000 nest egg and they are retiring in 6 months, but they've seen a lot of their wealth evaporated or eviscerated in the past month. What did they do? What's their game plan?
And they're retiring in 6 months?
They retire in 6 months. They now have a $500,000 nest egg. Maybe it was at $750,000. Prices are going up for their everyday needs. What do they do? Yeah,
look, every client, again, we keep going back to that. We do not have a one-size-fits-all approach to our clients. Each client's going to have their own risk tolerance and sensitivity and time horizon, but somebody that would be that close to retirement needs liquidity, needs to maximize liquidity in our view. So really, be looking at things like how do I maximize yield on cash, to Eric's point. Cash is an asset class and there's now yield, and so it would probably be more of that type of conversation with the client, really being that close, and then thinking about fixed income, right, from the standpoint of being able to clip coupons. Again, you got to be thinking about what part of the fixed income market you want to be in, but we'd be in a more defensive posture with a client in that situation.
Yeah, I mean, Lindsay's dead on. I would come back to that asset allocation. I might even suggest, if someone knows they're 6 months out from retirement, it's not really a question for me of what's going to happen short term.
And this isn't for me, full and fair disclosure.
Right.
I'm not near for retirement. I'm not too young. Thank you. I appreciate it. Just want to level set.
There's no gray hairs.
But your scenario, right? Hey, someone's ready to retire in 6 months, and they've seen their portfolio go from $750,000 to $500,000. I wish they would have had a conversation 2 or 3 years ago, saying, okay, how close are you ready to retirement? What is the risk that you're going to take? And yes, there's got to be some risk exposure there, because you're not going to hopefully live just 1 year in retirement, right? You're going to have a retirement that you enjoy and you travel and whatever's important to you, you do. But it's a broader discussion, so you're going to need some growth. But again, markets like this test the resilience of a financial plan, and was it built right? And that comes back to the power of working with an advisor and really just making sure it's tailored at an individual level for you.
In the last 2 minutes of the podcast, we always love to get our hot takes from guests. This one is, I'm a bit of a leadership buff.
Okay.
How does this work? Managing $3.9
We were waiting for you to ask that.
$3.9 trillion.
3.6.
3.6 trillion with a T. Like, what are your strengths, and how do you combine them to run a business that shows up on B of A's earnings release in a very big way, guys?
Yeah. You can imagine we got that question a lot.
It was a popular one.
Especially in the beginning. But we looked at a couple things. In our years, combined 54 years of professional experience, lots of different geographies across the country, lots of different roles, and communication is really important in any job. It's important in any marriage, it's important in any team relationship at work, it's important in any role that you have. And so a co-head model and how we make this work is very anchored in how we communicate. And Eric has said sometimes, I'll steal the line, we start our day together on the phone or in person, depending on where we are in the country, and we end our day on the phone and a lot in between. And none of this works without the communication.
Yeah, it's been 2 years. We celebrated 2 years.
Yeah, I remember seeing the news.
Yeah.
It feels like yesterday.
And as Lindsay said, it was a very popular question when it happened. For me, and this happened within literally 30 seconds of us both knowing that we had this opportunity to do this together, grounded in immediate trust, that we know putting the best interest of our clients and our advisors and the people that we serve every day at the heart of every decision we make. You find sort of a calm and comfort in that. So, we have the best interest at heart. My day does start and ends with Lindsay. People sometimes ask us, do we disagree? Sure, you'll never know. But I think that's the power of, the old wives' tale, two heads better than one, and there's a tremendous amount of leverage.
Do you think this model could work more broadly across Wall Street? Or is there something unique to B of A?
Yeah, no, I actually am surprised it's not more common, and we could have our own theories as to why, but I mean, Eric's point on when you start from a place of, hey, like doing this together is going to give us diversity of thought and get us to better outcomes for clients and the people that we serve, and is going to get us scale, leadership at scale, because the efficiencies that come with being able to cover more ground when you're two people. And when you, as I mentioned at the beginning, we've got people across 600 locations across the country, and so we can be in a lot more places separately. And then the part we haven't talked about yet in this podcast, but we talk about often, is both of us are parents, as Eric mentioned. And so we subscribe to the view of not a work-life balance, impossible to have balance on anything, but it's work-life integration. And so, when you think about got something with my kid's school. No, I don't make everything at my kid's school, but the things that are important I do. Hey, the place is going to run without me. There's amazing leaders, but knowing that there's someone in the exact same job that I'm in that has the judgment and has, we have full autonomy to be able to say to each other, you got this, I got this, we're going to make the decision and move on. In times where there's other things going on in life, is incredibly convenient and valuable and powerful for the people we lead in the industry to see that we each have two jobs. We are the presidents of Merrill, and we're also parents, and both matter. And you can't do both of those A+ every day, but we do prioritize both of those as best we can.
Well, I will say this to wrap this up. Hanging with you both for a while, I could see why this works. Like, there's just this one brain. I get it now more, and I feel you. It should be a model employed by more of these firms, because these businesses, as you know, have gotten so
big and
humongous and very complex.
And it's out there, Brian. I'll tell you, when we were promoted and we got the job, you mysteriously hear from other co-heads in the industry, outside of the industry, that reach out to you and send you a little note and wish you luck.
You're the standard bearer.
That's right. And
for
so,
the
yeah,
Cohen.
I'm surprised more people don't do it as well.
All right, well, hopefully they will after this episode. All right, Lindsay Hans and Eric Schimpf, co-heads of Merrill Wealth Management. Good to see you. Hang tough. These are busy times. Appreciate it.
You too, Brian.
Thanks,
Thank
Brian.
you so much.
Thank you so much. All right,
Okay.
and that's it for the latest episode of Opening Bid. Hit us with those thumbs up on YouTube. Love your comments. Always try to get to them. Love the hearts too on the podcast, on the platforms. Appreciate the love. We'll talk to you soon.